Welcome to the Recon Trader. In today's video, I will share with you the best grid bot step spacing, at least in my experience, when it comes to configuring and deploying one of these grid bots over on platforms like Bitsgap, KuCoin, etc. The spacing is going to be similar. There may be slight differences, but the concept is pretty much the same. And so for those of you who are not familiar with the grid spacing or step spacing, that is something you configure, and it is essentially the distance or the space between each order. A grid bot is made up of open limit orders, and in this case on the screen, the red lines would be your sell orders and the green lines would be your buy orders, and your grid spacing would determine how often the bot would actually buy or sell based on a percentage. And so as the price moves in between the red lines, for example, the bot would be selling, and on the flip side, as the price moves between the green lines, the bot would be buying. And I guess for those of you who might not be familiar with how a grid bot actually operates, it's extremely basic. It buys low and sells high. And so you're looking for price action that is essentially consolidating sideways, maybe slightly towards the upside. But at the end of the day, the bot buys the dip and sells the rip for profit. And then the reason the spacing between these orders is important is it does actually end up determining your profit. And so with that in mind, I do get a lot of questions on basically what is the best grid spacing. Is it 1%, 3%, 5%? Is it a 1/4%? Now, I will tell you in my experience, anything under 0.5% is really not going to be that profitable. But at the end of the day, the answer to that question, as it often is when it comes to trading, the answer is it depends. And so a key factor that the grid spacing does depend on is volatility. And that is why I created my own volatility indicator over on TradingView. And so if we take a look at Bitcoin's chart back here where you see a lot of the red bars, that is low volatility. And if you take a look at the candles, you can see the price is barely moving and it's pretty much flatlined straight across. Now over in this area here where we see the blue bars, that would still be considered low volatility. However, it's higher volatility. As you can see, the wicks on these candles would indicate a little more volatility. And then as we start to see the price move up or even down, volatility is not direction based. It is merely based on volatility or the movement of price. And so when we start to see these yellow candles over here, you see the price starting to pop. You do have a red candle with a big wick. That would be volatility. The next candle is a big green candle, more volatility. And now we're into the green bars, and that is going to be high volatility, which a dump like this would be highly volatile. And then the price starts to move sideways and flatline again, and we get back into the red bars, thus low volatility. And so how that relates to actual grid spacing is if the price is not moving 1% in either direction, your bot will essentially be inactive, and thus maybe a lower percentage would work better. However, if you're seeing big rips and dips like we see right here, again, here is a big wick towards the downside and a big wick towards the upside. That's all high volatility. So maybe a 3% grid space would be more profitable. And so I guess what I'm getting at is there's no one answer or magic percentage. But with that being said, with my experience trading Bitcoin, around a 1% grid space is probably the most effective that I have seen. When you get into the higher percentages, the 3s and the 5s, when Bitcoin really starts to grind sideways, your bot is not in the fight. But on the flip side, if you go with something under 0.5%, then you're getting a lot of moves and your bot is essentially over trading and not capturing the maximum amount of profit. So with that all in mind, I will show you a couple of examples. We'll run some back tests. I'll even deploy a couple live bots. Now, before we get too far into the weeds, if you're not familiar with Bitsgap, it's basically an all-in-one crypto trading platform. However, they're best known for their grid bots. And they do actually offer a free demo mode, and you can get started with a free trial. I will drop a link in the description down below. And if you use my link, you'll get the pro plan, which is the plan that I use during your free trial. After that, you can pick what plan you think will best suit you. So let's run through a few different examples and get a couple different bots deployed. Now I am going to go with my high price on these bots at around 22.5, which would be back up in this area of resistance. And then I'm going to go with my low price at around 17,000. Again, I'm trading Bitcoin USDT and I'm looking at my low price of 17,000. Typically I would go at the bottom of support. However, if Bitcoin breaks through 18,000, there is the probability that Bitcoin could be headed lower. And so I'm thinking 17,000 would be that next step down. And unfortunately, since Bitsgap discontinued their trailing down feature, I need to make sure I give this bot enough room to maneuver. Now on the top side, I could lower my high price back down into this area here, which would be around 20,500. And then I can enable the trailing up. So if I just go ahead and click and drag this down into that area, and now the high price is set at 20,500. And so if Bitcoin's price goes up above this 20,500, the bot will move the grid up and follow that price action towards the top side. So now I have my upper and lower price set. We can go with a grid step. Let's start at 0.49%. Click back test. You can see the 3-day results are just about 0.5%. Now let's change that to a 1% grid step and click back test. And we see the 3-day results improve to 0.63%. So that's a pretty good improvement. Now let's jump this up to say 2% and run a back test. And remember, your back test results do not guarantee future results. They're just more like a guideline, if anything else. And so the 2% actually took a step back from the 1%, and it's at 0.59%, where the 1% was at 0.63%. So right there, a bigger grid step didn't actually improve performance. Now let's jack this up to 3% and see if that makes a difference. Actually, the result got even worse. And so part of the reason why the higher grid step is not performing is you see this big gap here in between the grid levels, and that is a no trading space in order to cover the exchange fee that Bitsgap has built in, because they do take your exchange fee into consideration. So this bigger grid step, you need a lot more volatility out of Bitcoin's price in order to capture profit. So I will go ahead and knock this back down to 1%, as that did produce the best backtest result of 0.63% over a 3-day period. Over a 30-day period, we're only looking at 6.37%. Now, normally with these results, I would not actually deploy this grid bot, but for the sake of this video, I will go ahead and deploy this grid bot with the 1% grid spacing, which did appear to outperform the higher grid spacings of 2 and 3%. So let's go ahead and get this grid bot deployed. And so before I click start, I do want to give this bot some ammo. And so I'm going to give the bot 500 USDT to go to battle with. And now I can click start. And a quick preview, the bot type is SBot, exchange is Qcoin, pair is Bitcoin USDT. My profit currency will be USDT. And then the number of levels or grids that I have will only be 19. And that's determined really by the grid step spacing of 1%. The lower this number goes, the more levels there will be. The higher your grid step spacing is, the less levels there will be based on your upper and lower range. And then you can see I have the high price of 20,500. Trailing up is enabled. I have pump protection turned on. And then my low price is 17,000. So I can click confirm. And the grid bot is starting up. And now the grid lines are starting to populate on the chart. And so the spacing between each one of these grid lines is now 1%. And if I grab my ruler over here on the TradingView tools and basically drop in the ruler and measure out, you will see from one grid line to the next is essentially that 1%. Now, it's important to remember once again that volatility will really determine how profitable this grid bot is. If Bitcoin starts to just trade sideways and start to just grind essentially in a flat line, the 1% grid step spacing may not be that profitable. However, if Bitcoin's price can continue this type of volatility where it dips and rips and continues to dip and rip, then that 1% grid space could be very profitable. But at the end of the day, no one can tell you if Bitcoin's price is going to see increased or decreased volatility. What you really need to do is monitor your bots. If there's no longer any volatility, you might want to shut that bot down and redeploy on an asset that actually has higher volatility. So, I think that's enough jaw-jacking for this video. I will do an update video in the near future on how this bot actually performed. So now would be a good time to shoot that subscribe button so you don't miss that future update video. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comment section down below. I will drop a link to Bitsgap in the description down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.